Today we're going to look at 3 exceptional growth REITs that are poised to increase their net property income, which will then lead to higher DPU in the long run. There are many things to cover in any analysis, so we are just going to cover 3 main things for each REIT today: their business nature, growth story, and the DPU historical growth. Let's dive in. So the first growth REIT that we have is CapitaLand India Trust. Okay, and it is the first Indian property trust in Asia with the main focus on business parks. So they are based in India and they have invested in all the business parks. So now for the growth story, let's look at their growth and expansion across the portfolio. Right. So in this slide over here, we can see that although it's from 2022 onwards, but they have already done multiple acquisitions, right? First at Mumbai, Chennai, constantly acquiring Bangalore and all that. So on top of that, they are constantly developing and expanding their existing business parks. All right. So on top of that, right, let's look at their rental reversion. So from this slide itself, you can see that their rental income are 9% higher than in 2021 and 20% higher than December 2019. That's pre-COVID. So you can say that their rental rates, right, are keep increasing. So this is gonna bode well for CapitaLand India Trust itself. Okay, next let's look at their track record. Okay, when you look at the slide over here, you can absolutely see how it has grown from the IPO here, from I think around 2006, and they have constantly expanded their portfolio size. In fact, from 2006 all the way to year 2022 is already a 10% CAGR. Okay, so very impressive and consistent growth throughout the at least 2 decades, right? And as for their growth story, they also have a very clear strategy. Okay, so let's look at their strategy. Okay, growth strategy. Okay. Okay, so you can see that they have a very clear growth strategy as well. So they have a development pipeline, like they want to build how many square feet in Bangalore, how many in hyper urban, okay, and they also gonna do third-party acquisitions and also non-IT park asset class. So there is a very clear strategy over here on how they are gonna expand their portfolio size. On top of that, they remain committed to growing the portfolio, right? Their floor area from this December 2022 of 15.5 million square feet and increase it over 65% to around 25.7 million square feet. Okay, so you can see from here that they are very committed and they have all the pipeline well stated out. And let's look at the dividend part. Okay, you can see that the dividend yield, the distribution yield comes to around 7%. Quite attractive over here. Okay, 7.2% is pretty attractive. And the DPU trend is very healthy as well. You can see that right, if you look at just the dividend per share, it has been increasing from Sing dollars. I'm not talking about Indian rupee. I'm talking about Sing dollars. The dividend per share has been increasing as well. That means even though when you look at the Indian rupee depreciating against our Singapore dollar, the manager has done a very good job in hedging, in fixing the rate such that they are constantly able to increase the dividend per share. And based on the analyst forecast, is also going to increase furthermore into year 2025. So for this rate itself, if you were to ask me, with the bright economic prospects in India, especially now that it's becoming the most populous country in the world, I think CapitaLand in India Trust can be a good part of your retirement portfolio. Okay, next up is Keppel Infrastructure Trust. Their portfolio comprises of three core segments: the energy transition, which like you convert the waste right to energy, as well as environmental services, and also the distribution and storage services. Their assets are in many different countries, such as City Energy in Singapore, Aramco in Saudi Arabia, and even a German offshore wind farm. As for the growth story, I like two things that I see in the REIT itself. Right. So one is how they are focusing on evergreen yield accretive assets. So these kind of assets, right, can tap on the eco-friendly ESG trend. So these are circular trends, and how they can benefit is that they can go for sustainability loans with lower interest rates, or also enjoy the support of the various governments, right, in where they operate. The second thing I like is how they can tap on Kappa Corp's branding, aka the One Kappa network, right? So they can seek co-investment opportunities and draw on the Kappa's development capabilities. All right, so next let's look at the dividends part from Simply Wall Street again. And over here you can see that they offer quite a attractive distribution yield as well of 7.4%. And when we look at the DPU itself, right, this dividend per share, we can see that it is kind of stable, but it is projected to increase going forward because maybe of the new acquisitions they have made in the year 2023 or 2022. Okay, so although the growth rate is kind of muted, stable, but at least given that their properties are kind of a recession-proof nature, I think the trust is able to offer resilient cash flows and higher DPU once this kind of eco trend starts to kick in the long term. Before we continue with the next growth rate, if you are keen in dividend stocks and REITs, do remember to subscribe to the channel below and turn on the notification bell to be informed whenever I cover these dividend stocks or REITs. And in return, here's a financial meme for you. The last growth rate that we want to talk about is Netlink MBN Trust. It doesn't require much introduction, right? Because it owns the only fiber network in Singapore and is the only means of fixed broadband delivery. On top of that, it boasts over 95% residential penetration rate and last mile Wi-Fi hotspots. Like for example, when you're using the Wi-Fi in Starbucks, you are indirectly using that from Netlink Trust. On top of that, okay, broadband prices are relatively cheaper in Singapore. Okay, I'm not sure, but this is highlighted in Netlink Trust corporate presentation. And the trust has a review of this pricing every 5 years, IMDA, our government, right? Or may propose one in each of the third year itself. So if you were to look at the public transport fare prices, there is only one way for this kind of trend, and it is to go up. Okay, so Netlink Trust, from my perspective, is what you can call a high yield safe haven stock due to the resilient business model and the recurring and predictable cash flows. The growth can come from the review, which just nice can be completed by this year, 2023, and also overseas M&A opportunities. So this is where the trust has only around 23% gearing ratio, if I'm not wrong. So there is ample headroom for it to take on debt and expand overseas, take advantage of opportunities if it may come. Okay, so if you were to go to Simply Wall Street and look at the dividend itself, they have a decent dividend yield of 6% for Netlink Trust. All right, so the industry is only paying 4.1%. They are offering a 6% yield, pretty high. And if you look at the dividend per share history, I would say it's relatively stable as well. So much so that even in 2020, when we have COVID and all that, they are still paying the kind of same dividend per share, and analysts are projecting that it will increase, but a bit at a slower pace going forward. Nonetheless, because of the nature of the business and it's very predictable, very stable, I think that this is a growth rate and that everyone can also, look upon for your retirement because it is like a safe haven stock. Okay, to wrap up, these three growth rates combine the potential for capital appreciation as well as consistent dividend payments, which makes them like worth a spot in your retirement portfolio. So what other growth rates can you think of? Let us know in the comments down below. With that, if you find this video helpful for you, I would appreciate it if you can help me to tap the like button and subscribe to my YouTube channel for more of such stock analysis videos. And I will see you next time. Thanks for watching and ciao.